Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Mobile Limited annual report. China Mobile Limited offers a wide range of services that cater to the growing demands of communication, computing, and artificial intelligence in mainland China and Hong Kong. At its core, the company provides communication services including mobile communications, broadband networks, cellular IoT, and satellite internet. These services enable individuals and businesses to stay connected and access information seamlessly. In addition to communication services, China Mobile Limited also offers computing services that include data centers, cloud computing services, and cloud computing applications. This allows customers to store and process large amounts of data efficiently and securely. Furthermore, the company provides AI services such as data algorithms, embodied intelligence, digital intelligence culture, digital intelligence e-commerce, and industry digital intelligence services. These AI services aim to enhance customer experience, improve operational efficiency, and drive business growth. Overall, China Mobile Limited's diverse range of services makes it a leading provider of communication, computing, and AI solutions in the region. China Mobile Limited market capitalization of $1,709 billion is significantly larger than the average industry peer of roughly $10 billion. This shows that China Mobile Limited holds a significant advantage in their industry. China Mobile Limited trades at a lower price-to-earnings ratio of 11 times and a higher price-to-book ratio of 1.07 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 6.46%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth and decline can be identified through a thorough analysis of the given data. On the growth side, computing services have seen an impressive plus 11.1% year-on-year increase, while AI services have experienced a significant boost, with a plus 12.6% YoY increase in data algorithm revenue and a plus 13.3% YoY increase in digital intelligence culture services revenue. The rapid expansion of international markets has also contributed to the growth, with a plus 28.5% year-on-year increase in revenue. Furthermore, the introduction of 13 products generating revenue at the 10 billion yuan level and the successful integration of AI capabilities into production and governance scenarios have also driven growth. On the other hand, the primary drivers of revenue decline include communications services, revenue declining by 1% year-on-year due to a stable customer base and revenue growth in broadband network. The mass customer group has also seen a minus 1.2% YoY decrease in revenue, while voice services have declined by minus 3,457. The data suggests that the company's focus on emerging technologies such as AI, industrial internet, and quantum technology has driven growth, while traditional services like voice and SMS/MMS have experienced decline. The company's financial performance has undergone significant changes in recent years. Notably, the net income decreased by 0.9% year-on-year, indicating a decline in overall profitability. However, this decrease is not reflected across all business segments. In fact, some areas have shown improvement. The EBITDA margin increased by 0.2 percentage points to 32.3%, suggesting that the company's operating efficiency has improved. Additionally, comparable profit attributable to equity shareholders grew by 2% year-on-year, indicating a slight increase in profitability. The growth in profitability is particularly evident in the computing services segment, which saw an impressive revenue growth of 11.1% year-on-year. This significant increase suggests that the company's investment in this area has paid off. On the other hand, the communications services segment experienced a decline of 1% year-on-year, indicating some challenges in this area. Overall, while the net income decreased, there are signs of improvement in certain segments, highlighting the need for the company to focus on areas that require attention and investment. The company's financial performance indicates a strong ability to generate cash from its core operations. The operating cash flow, which measures the amount of cash generated by a company's core business activities, has been consistently positive over the past 2 years. In 2025, the company generated RMB 82 billion in operating cash flow, while in 2024 it was RMB 315,741. These figures demonstrate that the company is successfully converting its revenue into cash, which is a key indicator of financial health. The positive operating cash flow also suggests that the company has sufficient liquidity to meet its short-term obligations and invest in its growth initiatives. Overall, the data confirms that the company is generating positive operating cash flow, indicating a strong foundation for future success. The company's debt level has undergone a significant change. While non-current liabilities have increased by a substantial amount of RMB 90,968 million, the total liabilities have actually decreased from RMB 711,588 to RMB 695,331 million. This apparent contradiction suggests that the increase in non-current liabilities may be offset by a decrease in other liability categories. Regarding interest expenses, there is no direct information provided on page 13. However, it is mentioned that the increase in bank and other borrowings may have an impact on interest expenses. Unfortunately, this potential effect is not explicitly discussed on page 15. As a result, we cannot determine with certainty whether the company's interest expenses have changed significantly. The company's performance in various segments and regions has been notable, with several areas standing out as particularly successful. In the international market, revenue growth was impressive, reaching RMB 29.3 billion with a significant year-on-year increase of 28.5%. This demonstrates the company's ability to expand its reach and generate substantial income from abroad. The Hong Kong region also saw success, with the acquisition of Hong Kong Broadband, allowing for the provision of diverse and high-quality communication services. This strategic move has likely contributed to the company's overall growth in the region. In China, the company's mobile app achieved a remarkable milestone, with 346 million monthly active users, representing a 50% year-on-year increase. Furthermore, the 5G network dwell time ratio was an impressive 97.6%, indicating strong user engagement and satisfaction with the service. That concludes the financial summary for China Mobile Limited. Feel free to comment below, and I will be happy to answer them when possible.